Yo, yo, yo. Today is Thursday, October 14th, 2021. I'm going to be posting two videos today regarding AMC's price action because I don't want to I don't want to be jumping around too much. So I just want to give you a basic technical analysis, what I'm looking at, what I was looking at today. Obviously we pumped up today, hit a high of like $41. And I just want to talk about what I'm seeing from just like a pure technical standpoint. I know a lot of people are getting have been saying oh, the Wyckoff stuff, and I know that it's something that I'm working on and I'm learning how to do a little bit. So some people are like, oh, go back to what you already know and everything. I just think that it's really relevant because it represents what's going on in the stock price. And so yeah, anyway. All right. So we had this big run up. Excuse me. We had this big run up today. Obviously, pretty much from market open, we kind of just busted out and started running up. We broke 40 pretty quick and got as high as 41.15, as I mentioned. And when we were up here, I started calling for downside because I saw on Twitter, I was tweeting. I don't know why this thing will not stay. It just always extends my lines. Do I have to save it? Okay. Maybe it won't do it now. So I was calling this basically a rising wedge on Twitter. I can pull up the tweet briefly for you too. Just, I don't know. I don't know if you even care whether or not I actually did it in real time. I guess it doesn't really matter, right? But, yeah, so this is the tweet I'm referring to. There's my. So AMC needs to move up quick here to exit rising wedge. If I go back, then a little bit later when the price was at $40.70 or so, I said my current view is AMC comes back to test the $37 to $38 range. Volume is slowing down as we further into the rising wedge. And then shortly after that is when we had this breakdown. Which pretty much confirms that it was a rising wedge. We saw the volume kind of tapering off as the day went along. So then what happened was, well, I also had this shorter term, and I know, and I'm not going to talk about it too much here, but maybe it'll go into the other video, but I did have this shorter term distribution schematic that was playing out at the same time. If we go to a smaller time frame, you can see it a little bit better. If you're unfamiliar with Wyckoff, it's basically just a study of how institutions trade assets. And so I brought this chart up. Just look up Wyckoff distribution schematic. A chart that looks a lot like this will be the first thing you see on Google or whatever. So what I'm seeing, I still see here, and I know tomorrow, like we talked about last week and has been a trend for a while, tomorrow is Friday, which means that Max Pain comes into play. Currently, Max Pain is sitting at $38 on AMC. And that's also the 618 retracement. And to go along with this distribution schematic, let me just pull it up briefly, even though I said I wasn't gonna. I just think it's relevant. It's too relevant not to put in the video as it stands, because what we do here on the channel is we don't try to sit here and just say stuff that's gonna make each other feel good, right? We analyze a chart. We talk about what we see there. So the way I see it was this was basically your final sign of weakness in phase D. You can see you have your last point of supply, your UTAD, which is the upthrust after distribution. You have your upthrust here in phase B, your initial sign of weakness in phase B. I believe this was the second sign of weakness. So to combine this with this schematic, right? Combining this with the Fibonacci level, as well as the breakdown target for the rising wedge that we had, which would put you down into this $38 range. I mean, to me, it makes way too much sense for this to break down. Also, if you look at it on the hourly, you still could possibly be in like a larger rising wedge. Smaller time frames. If you bring up smaller time frames, let's see. Because I know at the end of the day it was pumping and it broke over $40. And again, for the Wyckoff method, just imagine that you're trading against one guy, and what he's trying to do is manipulate you into thinking one way or the other so that he can take advantage. That's kind of the method. I think we might have already broken out of this, and we're coming to retest the bottom of this rising wedge right here. And you're gonna see a breakdown here tomorrow. And I think that after you see that initial breakdown, it's just gonna kind of trade sideways like it does on Fridays. Sideways Fridays, am I right? So that's how I'm looking at it on the micro scale. I'm gonna make another video that's looking at the macro scale and some other stuff that I've been looking at the past few days. Well, actually, the past few hours, really. I've been looking into it. A good video for you to watch is Coin Bureau. He's a crypto YouTuber, one of the biggest ones. So if you're into crypto at all, you've probably heard of him. But he has a really interesting video on the Wyckoff method, and he put it out back when Bitcoin was nearing the end of its distribution back in May or June. I'm going to link that video down below because I just rewatched it, and it was a good refresher. And the way that he explains things, he's so good at explaining things and making them really easy to understand. So I would definitely check that video out in the description down below. Also, if you're new to the channel, make sure you subscribe, turn on post notifications. I'm going to be uploading another video today that's going to be on a more macro scale. That video is not going to be my most popular video, I think, from a like to dislike ratio. Because it's going to be about a potential bearish scenario that short-term bearish, still long-term bullish, but short-term bearish, and comparing the AMC's price action to itself in a way. So, yeah, that's my update. Again, just to refresh you, I see this here as a rising wedge that we already broke out of. This is the 3-minute chart. And I think that's what's going to basically put us into the end here of phase D in this distribution schematic. And that price target, again, especially using Fibonacci, is going to be $38. And I mean, as you can see, it with these distribution schematics, it tends to kind of just land where it started. That's the idea, is that institutions are buying the price up of the asset so that they can then sell it at maximum profit. So that's the general idea of it. And yeah, so that's pretty much the video. I appreciate you guys watching until the end. And again, make sure you subscribe and put on post notifications. Look, this channel is not about making you feel good. I'm not going to come here every day and tell you we're going to the moon tomorrow, yada, yada. I know a lot of people were excited with the price action today, but just think about the other side of it and imagine there's a guy on the other side and he's trying to make you make decisions that are going to make him money, right? When you see these big pumps like this, and then you see, you start to see this, this squeezing of price action, this rising wedge, just like the falling wedges that I call out on the when it's downside and I'm calling for upside. It's the same thing, right? So just make sure that you're keeping a level head. I'm not trying to tell anybody to trade anything. It's not financial advice, nothing like that. I just want to make sure that you guys are kept in the loop on what I'm thinking. And if that's not what you want, then just don't watch my content, because I'm gonna keep it real with you. I'm gonna be honest. So yeah. Anyway, thanks for watching the video, and tune in for the next one. It's gonna be later today. Thanks again.